Great. So this is financial reporting section 3. Topic is group accounting. That topic that you will never ever miss a question. The moment you understand that group accounting very well, then automatically you'll be able to pass this paper in round 1. The moment you get group accounting very well, and then of course we'll be able to see other topics like branch accounting. Branch accounting uses the similar concept with what here. These one you'll be able to see, right? And then of course we have these smaller topics like partnership, etc. Financial reporting is quite interesting. So of course, even the CPA Section 6 students, I welcome you on board. For those of you who are here, welcome you on board because of this. Group accounting is a serious thing. It's a serious thing, even the CPA Section 6. Great. So we started by saying that according to IFRS 10, International Financial Reporting Standards 10, it defines a group to be comprised of a parent and a company called who? A subsidiary. So basically, is a group is anytime you look at related companies here, in which sense we have a parent in that group, of course, in that family, a parent plus what here subsidiary. As you shall be seeing later on, subsidiaries here can be many. Subsidiaries can be many. So please allow Mwalimu to project some handout here, which is very important for us. So we are getting this class, which apparently happens to be a free of charge class today from RCM Online College. Those of you who would want to join us, of course, I've been able to put our number there, 0719 525,000. Now, consolidated financial statements. Now, ladies and gentlemen, from my simple definition of a group, being in this case here, the parent plus what here, its subsidiaries. Once we have this group has been defined, at the end of the day, the group will be required here to have their members putting together their financial statements, consolidating their financial statements, It is this process of consolidating financial statements that we call what here? Consolidated financial statements or consolidation. So the first thing that you need to know is number 1 here. How is a parent subsidiary relationship identified? How do we identify the parent subsidiary relationship? You're told here IS 27, International Accounting Standard 27, defines consolidated financial statements as the financial statements of a group in which the assets, liabilities, equity, income, expenses, and the cash flows of the parent and its subsidiaries are represented as those of a single economic entity. As those of a single economic entity. When you talk of a single economic entity, what are we saying? For example, if it is assets of the parent, we shall be adding assets of the parent with the assets of what here? The subsidiary, because the concept here is that because it is a parent and its children, a parent, yes, a parent and its children, at the end of the day, we must consolidate. We must put everything of these 2 or more companies together as if this represent what we are calling one economic what here? One economic entity, one economic entity, one economic entity, one economic entity. So we are told here, the diagram below shows an example of a typical group structure. In this typical group structure, you can see that the parent owns 80% of the subsidiary. 80% of the subsidiary is quite high. For financial reporting purposes, our threshold will be 50%. For financial reporting purposes, our threshold will be 50%. But if we own more than 50% of a company, if, for example, we have here company A, owning, ladies and gentlemen, more than 50% more, we own more than 50% of this. So 50% plus 1. If we own more than 50% of company B, then company B automatically will be a subsidiary, and then company A will be called what here? Somebody called, will be called a parent company, will be called a parent who? A parent company. Will be called a parent company. So this is something that we will really have to appreciate very well. So here we are. We are told the diagram shows how a parent company has control over a subsidiary, In financial reporting level, it is assumed that control exists if the parent company has more than 50% of the ordinary shares are also called equity shares, i.e. giving them more than 50% of the voting power at the AGM, So please remember the way I teach. For those of you that I'm teaching currently, my teaching style is quite a nice one. You don't write any notes. Actually, it's only that this is my very first time to teach this group. Normally, I share my notes, in this case here, ahead, quite early. So I share with you the notes you can print so that we don't waste any time. In making notes in class. However, feel free in this case here to take your helicopter, high level kind of notes. It will be very important, So what have we said? That for us in financial reporting, the threshold is 50%. But when you go a little bit higher to CPA section 6, or rather advanced level, these are the kind of things we'll be knowing here. However, there are examples where a holding of less than 50% of the ordinary shares can still lead to control existing. IFRS 10 states that an investor, i.e. the parent company is the investor. Right? IFRS 10 states that an investor, the parent company, controls an investee if and only if the investor has all of the following. Number one, we have power over the investee, which is our subsidiary. That means that we are in control. We are able to control the investee company. We are able to control the subsidiary. Then number two, there is exposure or rights to variable returns from its involvement with the investee. Here I have to explain something small, ladies and gentlemen. The concept of the parent company being exposed to variable returns. Now listen. If, for example, company A gave company B a loan over $1 million shillings. So in this case, at the end of the year, company A will be getting a return from company B in the name of what? Interest. But you see, interest, if it's 10%, the interest 10% will be constant throughout. That is not the kind of return we are calling variable. Variable returns, ladies and gentlemen, are returns which are associated with profitability. Profits in this case here that keep on doing what here? Somebody fluctuating. Profits which keep on fluctuating. So we are saying number one, the first condition for us to say really that this is your what here? Your subsidiary. Number one, you must have power over it. You must be the one who is calling the shots at the board level, for example. You are involved in decision making, so you've got power. Power, of course, we'll be able to see. If you decide this has to happen in this company and it happens, then we'll say that you are powerful. You have power over the company. But even with that power, there is a second condition that you must be exposed to who? To variable returns. Number three, the third and the last condition there, we are told here, the ability to use its power over the investee to affect the amount of the investor's what here? Returns. So in this particular case, the third condition, we are looking at the power being combined with what here? These variable returns. In this case here, you can influence the variable returns. You know, if you are powerful and really you have invested in this company, what would you want out of this company? You would want this company to grow in terms of what here? In terms of profits. When they grow in terms of profits, what do you get as an investor? You get more dividends. So we have said very, very importantly, ladies and gentlemen, that in this case here, you've got power, right? There is the concept of what here? Exposure to variable returns. And then, of course, we have the concept of you being able to utilize this power in your benefit by ensuring that this company that is posting returns to you is performing very well. Is performing very well. Great. So I'm repeating again the 3 points. Power over the university. Number 2, exposure to the variable returns. 3, the ability to use its power over the university. The ability to use its power over who? Over the university. So this will be very important for us to do what here? To appreciate. So we are told the power may be evidenced by all or some of the following. By all or some of the following. The power over more than 50% of the voting rights by virtue of an agreement with other investors. Number 2, the power to govern the financial and operating policies of the entity under statute or an agreement. Number 3, the power to appoint or remove the majority of the members of the board of directors. So you have got power to appoint directors. Number 4, the power to cast the majority of the votes at a meeting of board of directors. We are told here that a typical OT questions, right? A number of different investments here. We are given here some very good illustration, very good illustration of a company called a Green Company. And this one I'm going to give somebody a present. So we have Green Company, which owns the following investments in other companies. So we have Violet Company, right? Green owns 80% of equity shares. And then it has got non-equity shares like preference shares, nil. In Amber, 25% equity shares. Green has 25% equity shares in Amber and 80% non-equity shares. Black Company, 45% equity, right? 25% non-equity. Green Company has also appointed 5 of the 7 directors of Black Company. Which of the following investments are accounted for? Which of the following investments here should be accounted for as subsidiaries in the consolidated accounts of Green Company? Ukiwa ni mwanafunzi wa kwanza kupata question correct na kupatia zawadi. So angalia iko na multiple choice, niambie ni gani inafaa kuwa consolidated as a subsidiary in our books of accounts. Ikiwa ni mwanafunzi wa kwanza kupata correct, straight, ladies and gentlemen, we give you a present. Remember, it's not about cramming those things that I said up there. No, it's about you getting a good exposure in a way that even if they twist, they bring it in form of some case question like this, I should be able to get it right. I should be able to get this right. The company, mother company, the investor is called Green Company, which has 80% equity shares in Violet, 25% in Amber. Then we have Black Company, 45%. But there is some information which is very important that the Green Company has also appointed 5 of the 7 directors of Black Company. So which of the following investments are accounted for as subsidiaries in the consolidated accounts of Green Company Group? Somebody please answer me this, and then if you be the first one to get it right, I give you 300 shillings immediately. Nu says B, Mary says A. Tuende pole pole tuone. Mwingine amesema D, Purity Chepkoni. Eric amesema C. Tuona amekuwa wa kwanza kupata correct. Tuona ameguess, not kuguess but kupata correct wa kwanza. So answer yake ndio hii hapa. Na unajua kinafaa kujua ni kwamba automatically whenever it comes to us defining control, we don't use non-equity. You know, you can only participate into profits of a company if you have equity shares, not non-equity. Equity shares, ordinary shares. So don't use this as a basis of ascertaining subsidiary status. Never use non-equity shares here to ascertain control. These are irrelevant. So like now in Amber, we happen to be having all the way up to 80% of non-equity, right? Right? So I'll not use this at all. So Violet company, obviously, 80% is more than 50%. So Violet, automatically, Violet is a subsidiary. That is okay. Amber, 25%, unless they give us more information that can signify control, ladies and gentlemen, Amber is not a subsidiary. The same case here with the black, you can see it's below 50%. However, look at this particular note. Green company has also appointed 5 of the 7 directors, meaning that Green company is on the table of making decisions of which company? Black company. Meaning that even though, ladies and gentlemen, our percentage in black company, even though it is less than 50%, but still we are in what here? We are in control. Because we were told up here in one of the points, the power to appoint or remove the majority of the members of the board of directors, the power to cast the majority of the votes at the meeting of the board of directors. So you can see once we appoint 5 honestly out of 7 directors, then honestly 5 votes, because you see these guys will always be voting as per the parents dictate. 5 votes are 1 too many. So it means automatically that green is as well on top of who? Green is in control of black. So it's supposed to be violet and the black are subsidiaries. So you're supposed to have picked C as the answer. Look at how they are framing their answer here. Let's consider each of the investment in turns to determine if control exists, and therefore if they should be accounted for as a subsidiary. Violet company, by looking at the equity shares, green company has more than 50% of the voting shares. Voting shares are also known as what here? Equity shares, i.e. an 80% equity shareholding. This gives them control, and therefore without any iota of doubt, Violet company is a subsidiary. Amber company, you must remember to look at the equity shares, as despite having majority of non-equity shares, these do not give a voting power. They can't vote on the board. Remember, voting at the board level, we normally go to the AGM as shareholders. Ordinary shareholders, we appoint ourselves or anybody else to the board. So if you have got preference shares or any other non-equity shares, that is irrelevant to us as pertains to what here control is concerned. So you're told as green company only has 25% of the equity shares, they do not have control, and therefore Amber is not a subsidiary. We are told the black company, by looking at the percentage of equity shares, which was 45%, you may incorrectly conclude that the black company is not a subsidiary, as a green company has less than half of the voting rights. However, by looking at the fact that green company has appointed 5 of the 7 directors, effectively, they have the power and the ability to use that power to affect the decision making in the company, which will impact on the returns to be made. This should make you conclude that black company is a subsidiary. Therefore, the correct answer is C. So, ladies and gentlemen, it will be very important for me to reward the first student who gave us that answer C. Please, if you are the one who was the very first to give us the answer C, I would want you to write your number there. We send you M-Pesa. Please write your number there. We send you M-Pesa right away, 300 shillings. So Hussein here, I got it right first. So is everybody in agreement that it is Hussein who got it right first? Is everybody in agreement that it is Hussein who got it right first? Who got it? I know Kamir, you got it. Oh, it's Kamir. So they are saying it's Kamir. Can I get further confirmation that it's Kamir? And if it's Kamir, could you then kindly give me the number, the phone number? I send you 300. Remember in my class, you are Kamir. Yeah. So Kamir is 0722. Just a minute. So we have here 0722 . So please, committee, confirm once you get it right. Once you get the cash, the customer does not exist. What do you mean? Let me repeat again. Did I pick it wrongly? Omar Abdi. Great. Thank you very much. Great. So remember, in my class, all of you are who are winners, and everybody has to get a present. Everybody must get a present by the end of this session. All of us are winners. All you need to do is to be very attentive, very keen, very keen. Great, 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 very keen. Just be very keen. So I hope, even if you never got it right, you have picked the major concept of how do we ascertain whether company B is a subsidiary or not. Are we together up to there? 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 Yeah, those are 5 yeses. I'm waiting, out of 60, I should be able to get like 20 of them. 20 of them, 20 of them, 20 of them. Thank you very much. Great. Thank you very much. So now we continue. Now, ladies and gentlemen, once I've been able to identify that this is my subsidiary, then straight away I must start knowing how to prepare my consolidated financial statements. And one of the things that normally gives my students problems is how to eliminate intra-group trading balances. How do we eliminate intra-group trading balances? So it will be very important for you to remember that your group constitutes what and what? A parent and a subsidiary. And remember, subsidiaries can be many. A parent company can even be having like 10 subsidiaries. So listen and listen to me very well. A parent is like a father, like myself here, I have a son, right? So if, for example, this morning, my son came to me and told me, you know what, Dad, I've got this problem, I've got this problem, and this problem, and this problem. At times they give you so many problems. Then he tells you, please, can you lend me 10,000 Kenya shillings, which I'll be able to return, say, in a month's time? Of course, I'll give him the money. But will I expect to get anything from this son of mine? Will I expect to get anything from this son of mine? To get anything back? Do I expect him to return that money to me? No, no. That is what we call intra-family, within the family, within the family. Any owings that are within family, when a family member owes the other or is owed by the other family member, from the eyes of the group, that money is fake and it should be cancelled from the group's financial statements. So if my madam asks something from me, of course, I'll not be able to do what here later on, not unless I'm a crazy husband. Later on, remind her that, you know, you told me to give me these 30,000 shillings. No, but somebody somewhere told me that when your wife gives you money as a husband, that money has to go back. The ladies in the house, is that true? That when you lend some money to your husband, is it true that your husband must return that money? Ladies in the house, ladies in the house, ladies in the house. Please be truthful. Be very truthful. Ladies in the house, be very truthful. Nobody's fighting you here. Not always. Yes. Lazima arudishe. Yo lazima irudi. Yo lazima irudi. Thank you very much. Lakini sasa, in the eyes of the group, any intra-owing is always fake. Intra means internal. Any internal owings are always what here? Fake. It doesn't apply to owings only. It also applies to sales. When you will be looking at the financial statements, we are going to our past papers immediately after this. I just want to lay some great foundation. Remember, I'm quite lucky because currently, although these are things that I should not say. So if these two companies, a parent and a subsidiary, if they happen to trade with each other, where you see you're being told that the parent sold the goods to the subsidiary, say goods worth 10,000, such a sale is a fake sale, because just like the example of family, if assuming in this case here, my wife sells jackets like the one that I'm wearing here today, a good jacket. If I go to her shop and I say, hey, you know what? I would want to take this jacket. If I take, right? Of course, in the a point of sale system, that transaction will be accounted for as what is a sale, right? But within ourselves, within our family, when we go, even if I give her the money, when we go to the house in the evening, when we are counting our money, if, for example, I gave her like say 2,000 or 3,000 for the jacket, we shall set that money as, because really that money never came from outside. That money came from a family member. So such a sale is always a fictitious, is always a fake sale, which should always be eliminated. So anything that is internal must always be done what here? Must always be eliminated. Now here I am, I'm giving you a question, but this time around, this question is only worth 200. And of course, the money will only go to the very first student to get this correctly. Are we ready? I display the question. 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 Are they ready? Are they ready for the question? Are they ready for the question? Yes. So the question is here. We are told the Pink Company acquired 80% of Scarlet Company ordinary shares on 1st January 2022, rather 20x2. So automatically, Scarlet is our subsidiary. Why? Because 80% is more than 50%. At 31st December, extracts from their individual statements of financial position showed we have current assets, receivables, 50,000 for Pink, Scarlet 30,000, and because these are subsidiary and a parent, at the end of the day, from the group eyes, we have to add the two. The same case here with payables, we must add them. As a result of trading during the year, Pink Company's receivables balance included an amount due from Scarlet Company of 4,600. Scarlet Company has a corresponding payables balance. What should be shown as the consolidated figure for receivables and the payables? Please, the answers are given here. The multiple choices are given there. The multiple choices are given there. So I'm waiting to see who will be the first student to give us the correct answer. But because this is quite simple, you go home with 200. But the next question is an 1,000 Bob question. The next question is a serious question. You'll go home with 1,000. Yeah, thank you very much. I think that is enough. Now we should be able to come and see the answer. Let's see the answer. The correct answer is D. The correct answer is D. Who was the first one to give us this answer D? Who was the first one to give us this answer D? Who was the first one to give us this answer D? Martin, eh? People are saying it is Martin. It is Martin who was the first one to give us answer D. How comes nobody else is saying Martin? How comes nobody else is saying Martin? Is it Martin really? Please move very fast. Give us the name, and if it's Martin, give us the number. We finish the transaction. Martin, yeah. So Martin, give us your number. Why are you shy, Martin, giving us your number? Martin, give us your number. We finish this transaction. We go to the next one will be 1,000 bob. The next one will be 1,000 bob. The next one is a nice one. I love the next question. Unfortunately, fortunately for my questions, they're not very tough, because at the end of the day, a student must get it correct. A student must get those questions correct. And this number is a nice number. Sugesoi. Is it Sugesoi? Yes, thank you. Great. So is there any student who expects Mwalimu to do this question? Is there any student who expects Mwalimu to do the question? Is there any student who expects Mwalimu to do the question? Any student who wants Mwalimu to do the question? Great. Welcome, Martin. But I'm not even happy with that transaction, the 200, 300, that's too small. I'm so sure today there is somebody who will be able to, if you are keen, if you're very attentive, you'll be able to get some serious cash from me today. Yeah, so there is somebody who wants to do it, so let me do it. So you see, one thing you're supposed to appreciate here is that to consolidate is to put together. To consolidate is to add, So then what you needed to have done is to add the receivables. So like now we have here receivables. So we have the group consolidated financial statements, which is an extract. This is an extract. It's an extract, not the whole of it. So we have receivables. So receivables, 50,000, because I'm consolidating, I'm adding, right? Plus 30,000. And then the same case, we have the payables. So payables, what do we have? Payables, we have 70,000 and 42,000. But now remember, there is a fake transaction inside here. There is an intra owing. An intra owing of how much? Of 4,600. An intra owing of 4,600. An intra owing of 4,600. So it means that one of these companies that had accounted for this 4,600 as a receivable, the receivables are overstated, so they must be reduced with the 4,600. At the same time, in this case here, one of the companies was saying, I'm going to pay my father. How do you claim in your books that you're going to pay your father, and we know at the end of the day he is your father, you'll not be able to pay this gentleman at all? So come and say here minus 4,600. So remember, for intra owings, you cancel them from receivables and from payables. You cancel them from receivables and the payables. You cancel them from receivables and the payables. So please give me the answer. The first one is supposed to be what here, somebody? The first answer is supposed to be what here, somebody? Receivables figure. I'm not seeing their charts. I'm not seeing their charts. I'm not seeing their charts. 75,400, 75,400. So this is 75,400, 75,400. How about the second one? How about the second one, which is receive payables? 107,400, 107,400, 107,400, 107,400. And remember, these are things you guys were able to get even before I taught you. You guys are geniuses. You guys are geniuses. Could you kindly, in this case here, clap for yourselves? Clap for yourselves. Yeah, there is a place there where you're able to see claps. You don't know how to clap yourselves. Clap for yourselves in Zoom. There's a place where you should touch. Yes, like Erica. Eric, you are, yes. You guys are understanding consolidation even before I start teaching. Haven't yet started teaching. Thank you very much. Thank you very much. Thank you very much. Remember, as I teach, get to know how to use those emojis. Those emojis are very important. We call them emoji. Emoji comes from which word? Emotion. 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 So we have emotion or emoticon. Emoticons, like that. So those emojis come in various, they're very nice. In terms of Zoom, they're very nice. So when you are understanding these things very well, please ensure that you throw a smile back to me. Ensure that you throw a smile back there. Are you able to see the smile? Are you able to see the smile there? Please make sure you're able to see the smile, and then you smile right here. You smile right here. Are you able to see the smile there? Yes, I can see several people. Paka wamecheka kabisa. Very good. Very good. And then again, when you're not able to understand at all, please, you can either use a thumbs down. There's a thumbs down, or in this case here, you put forth a very sad face. Very sad face. Because we need to communicate. And we need to agree on how we shall be communicating. Are you able to see this sad face? Are you able to see this sad face? The only one that I don't agree, which you should never put in my class here or on WhatsApp, is the face which cries. The face which cries here, those ones I don't entertain them, because at this level, we should not cry over anything. No. It's either we are sad a little bit or very happy, right? We can't cry. We're not cry babies. We can't cry. Great. Great, great, great. Thank you. Thank you very much. Now we continue. We go to something very, very important. We have note number 3. Note number 3, this is a very important adjustment. It's called adjustment for unrealized what year? Profit. Adjustment for unrealized profit. If you can understand this, then straight away you are on the way to getting a lot of money today. 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 You will get a lot of money from me today, if you happen to understand this. And for you to understand this, ladies and gentlemen, there is one concept you're supposed to understand, only one. And then you get yourself some nice cash. I need to give nice cash. I need to give nice cash. I need to give nice cash today. I need to give nice cash today. So, ladies and gentlemen, here we are. We shall be calling this UPS. UPS. UPS stands for what in full? Unrealized profits on stock. Unrealized profit on stock. How does it arise? How does it arise? How does it arise? It arises. Oh, I share. Okay. How does it arise? It arises whenever there is a intra-trading. Whenever there is any internal trading. Yes, I'll share the notes. Yes. Whenever there are these two companies which are related, trading, selling goods to each other, in most cases, we shall have what we call unrealized what? Profit. Listen. So we have in this case here A. A could be Aura. And then we have in this case here my dear wife, Anaitwa Naomi. Right? So assuming in this case, ladies and gentlemen, that Naomi happens to be a student of RCM, right? No, that will be a services industry. Assuming in this case here that I'm selling goods in my sales report. I'm selling some goods here. In my sales report, for example, I have a recorded sales of 10,000. So when I record these sales of 10,000, ladies and gentlemen, of course, remember whether I receive money or not. If I've sold, I've sold. This figure will get its way to my income statement. It will be used in computing what are my profits. But what if some of these goods in this case here went well within the group, went well within the family? Perhaps it's Naomi who bought goods from our shop worth 2,000. Perhaps this is furniture. So meaning that this furniture that is worth 2,000 is well within the family. So if it is well within the family, honestly, it means here Aura as an independent company has not realized profit out of this. These things are within the family. We only recognize profit which we earn from third parties. We don't recognize profit that we earn from who? From our sister companies, from our subsidiaries, from our family members. No, we only recognize profit. Like now here, I can only recognize profit out of sales that I made over 8,000 from out there. Any profit I make in this case here from my madam, that is a fictitious profit. It is a profit which is not realized. So please, for the ladies who told me that whenever you give any money to your husband has to return that money, please, for this one, if he comes to your shop and you are able to sell goods to him, don't realize that profit. That profit is just as good as getting money from this pocket to this pocket, to the other pocket. Right? How I wish I could, somebody, be serious, be very serious. There is 1,000 which is ahead of you. In less than 5 minutes, there's 1,000 which is ahead of you. Try to understand this. Yes, try to understand this. Then when you talk of unrealized profit, first of all, how does it arise? It arises out of what here? Intra-trading, internal trading. If there are goods, ladies and gentlemen, in this case here that were bought from us, from our sister department, or rather our sister company, automatically you never earned. You've not earned that profit. You've not realized that profit. Now, listen, how do we get this UPS? This is very interesting. To get UPS, we normally take profit margin times remaining intra-sales. This is a formula that even if I'm going to send you the notes immediately before the class ends, this is a formula that you must appreciate, all of us. You must write this formula down. That UPS, unrealized profit, equals profit margin times remaining intra-sales. Please, I would want this to be really highlighted. These stands for what here? remaining intra sales. So like in my case here, assuming that my profit margin is 10%, right? And the remaining intra sales, internal sales is 2,000. Then, ladies and gentlemen, my UPS will be 10% times 2,000, which is what somebody there, which is 200, which is 200. But now listen and listen to me very well. What if in this case here, Naomi is able to sell some of these goods to her friends? Perhaps by the end of the year, when I'm doing my group financial statements, I realized that Naomi was able to sell goods to her friends worth 800 sold. Listen, UPS is normally pegged on remaining because the 800 has already gotten away to third parties. As we are concerned with what is remaining with our subsidiaries, that is remaining within the group at the end of the year. So if Naomi does this kind of a wonderful thing, then automatically the UPS will be 10% of the remaining. If I were you and I had a yellow highlighter, I would have highlighted remaining. I would have highlighted remaining. Remaining. Thank you very much, Samoy. 1,200, yes. It would have been 10% of 1,200. Now, before I show you the mathematics that I would want you guys to really earn some good money out of it, I would want you to look at this. Just an illustration. An illustration. We are told A sold goods to B, which is a subsidiary of A, worth Kenya shillings 1 million. Kenya shillings 1 million. B had sold 60% of these goods, by end of the year. So we are required here to determine UPS. If the firms determine UPS if the firm's profit margin is 8%. Here in a pesa, this is just a small illustration here in a pesa, but it's important that really you get to give us this figure. Determine UPS of the firm, if the firm's profit margin is 8%. I think this class is very good. How comes I've not been teaching this class? This is a class that I should have been teaching from the word go. This is the class that I should have been teaching from the, going by the response that I'm getting here, this is a wonderful class. Now remember, the formula here is the one that will guide us. The formula here is the one that will guide us. Can I rub this? 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 Can I rub this question? They haven't written. Oh, they're still giving me answers. But you see, I need a place to write. Yes. So remember here that UPS is always pegged on REIS. UPS is pegged on REIS. And for us, ladies and gentlemen, to be able to get UPS, we shall take the profit margin times the remaining intra-sales. So remaining intra-sales is 40%. 40% of 1 million. Remember, company B had already sold 60%. So if they had already sold 60%, it means that they were left with, it's about remaining. So then 40% of a million will give me 400,000. Will give me 400,000. And therefore, my UPS, if I go by the formula here, it will be 8%. 8% of 4 million. 8% of 4 million. 8% of 4 million, which will end up giving me how much, ladies and gentlemen? Is it not 32,000? Not 4 million, 400,000. 400,000. 400,000, which will end up giving me 32,000. So the ones who got 32,000 are correct. Let's clap for them. Let's clap for them. And remember, you must always know how to celebrate success. It doesn't have to be you succeeded, but you must know how to celebrate success. How to celebrate. Yeah, we are clapping for these people, 32,000, because these people were able to appreciate the fact that if 60% had been sold, it's about release. It's about remaining. It's about remaining. So the remaining interest sales here is 400,000, 40%. Thank you. Great. Thank you very much. Thank you very much. Now, let me give you another question. 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 So we have here a parent company. A parent company sold goods worth, again, 1 million to its subsidiary, The subsidiary had 30% of these goods in store by end of year. By end of year, it had, in this case here, 30% of these goods in store by the end of the year. By the end of the year, the profit markup of the firm is 10%, and then we are required to determine the unrealized profit on stock. You determine the unrealized profit on stock. You determine the unrealized profit on stock. Thank you very much. And this really is my very best. Actually, I should resign from teaching, for so long. I've been teaching the advanced level. I've been teaching the advanced level students. But because of the participation here, I think I need to get from up there. I come and start teaching the normal financial reporting. The normal financial reporting. I think that's what I need to do. And simply what has impressed me most is you guys, you want to be really engaged. You are engaged. You're engaged. You're engaged. You're engaged. You're engaged. Victor Owino, 1930. So remember, this time around, the remaining percentage is 30%. So 30% of a million is 300,000. Remember, it's all about remaining. What is remaining? What is remaining? What is remaining? Remaining is 30%. So don't go for the complementary. Don't go for the 70%, because the UPS is always on the basis of what here? On the basis of REIS. On the basis of REIS. Urbanus is coming with quite a different answer. Now, ladies and gentlemen, one thing that you're supposed to know, and if I were you, I would really hold my ears like this as I listen. I have to hold my ears like this, because this is so important. This is very important, that we do not make use of profit markup in group consolidation. Group consolidation, we always use what we call margin. Group consolidation, we use margin, not markup. We use profit margin. There is a difference between profit margin and the profit markup. There is a difference between profit margin and the profit markup. Quite a big difference. Quite a big difference. There is a big difference between profit markup and the profit margin. Now, if, for example, you tell me that the markup is 1/4, I will tell you that the margin is 1/5. If markup is 1/4, then the margin will be 1/5. What have I done to get 1/5 margin? What have I done to get 1/5 margin? What have I done? What have I done? Fortunately, all of us here did the management accounting section 2. Fortunately, all of us did the management accounting section 2 paper. What have I done here? That if markup is 1, add 1 to the denominator. Actually, I can't even teach it better than what I'm seeing that lady telling me. That lady has already nailed it down. The lady amesema kwamba yeye kitu ya kwanza amejua ni kwamba margin has a bigger denominator. Margin has a bigger denominator. Margin has a bigger denominator. Margin has a bigger what here? Denominator. Margin has a bigger denominator. That's how you have it in your head. Always. So if you give me markup, and you want me to come and give you margin, then what I'll do, first of all, I'll write the markup the way it is, and then I'll come and talk of 1/4. This 4 has to be inflated because margin is bigger. The 4 has to be inflated by you adding. You take this and add here down, which will end up giving me 1/5 like that, 1/5 like that, 1/5 like that. No, they haven't yet understood this, and the mathematics that I'm going to give them is quite relying on this. It's quite relying on this. The 1,000 bob that I'm going to give them is quite reliant on this. This is something, if you get today, you'll end up getting more than 1,000 bob at the end of this session. But if, for example, markup is 2/5, then margin will be equal to who? Margin will be equal to who? You know, there is some time back here, a student told me that, Mwalimu, you know what? That it is all about adding 1 here. No. It has got everything to do with adding the numerator. So if in the numerator we have got 2, you simply come and add 2 there. So it should be 2/7. 2/7. 2/7. We've learned 2 things here. That for group consolidation, we always use what here? Margin. And then number 2, in getting margin, should the examiner give me markup, in the denominator here, I will take the denominator of the markup plus the numerator. No, they haven't understood this yet. Let me try them before I give them this mathematics that comes with a trophy. This is a serious trophy that students are going to earn from me today. This is quite a serious trophy that these students are going to earn from me today. So what if, for example, you go to a question, like there are several questions of this nature, and then you realize that this examiner has told you that markup is 20%. Then what do you think will be the answer for margin? If markup is 20%, if markup is 20%, if markup is 20%, margin. Thank you very much. It will be 20/120 because these are serious students who have mastered very fast that 20% is the same as 20/100. So it will be 20/100 plus 20 there, which will be 20/100. What here, somebody? 20. If you would want to narrow this down, automatically this will be 1/what here? 1/6 like that. 1/6 like that. 1 over 6. 1 over 6. You would want to change it back to percentage, but there is no need. Just leave it at this stage. Leave it at that stage. Ah, great. So, ladies and gentlemen, what I would beg of us is that we get a break. A break over how many minutes? A break over how many minutes? A break over how many minutes? I always love breaks. I always love breaks. The only thing that I can't do, I was told that this class is supposed to be a double. At my age, I can't teach a class double. At my age, I can't teach a class double. I would rather you tell me any other weekday when you are free. When you are free, because I'm so sure before I finish this group consolidation and I've also been given branch accounting to do, I would need like, how many sessions with you? 4 sessions. I've been given 3. I've been given 3 topics actually to finish with you. So I would want you to tell me which other weekday do we meet, because I can't teach double. I can't teach double. Are we back? Are we back? All of us, we continue. Yes. So straight away, I would want to see whether you guys are following by giving you a small illustration here. Look at illustration number 3. Look at illustration number 3. P company acquired 70% of the voting share capital of Silver Company on 1st October 2011. So 70% is more than 50%, meaning that we are in control of Silver Limited. Silver is our subsidiary. We have to consolidate it fully. The following extract are from individual statement of profit or loss of the 2 companies for the year ended 30th September 02. Purple Company, Silver Company. So we have the revenues of the parent, the revenue of Silver Company, cost of sales, gross profit has been given. Of course, they subtract, they took this minus this. Purple Company had made sales to Silver Company during the year of shillings 5,000. Purple Company made sales to Silver Company during the year of 5,000. I can see an intro sale. I can see a fake sale. Purple Company had originally purchased the goods at a cost of 4,000. Half of these items remained in inventory of Silver Company at the year end. What should the consolidated revenue be for the year ended 30th September 02? That's a simple question. Simple question. No reward really for that. That's a simple question. No reward for that. Those answers are too few. 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 Miriam anasema nimewachwa nyuma. Huyu akasema mlisema fara hakuna kulia. Haujawachwa nyuma. Ladies and gentlemen, we are doing illustration number 3. Illustration number 3. Purple Company acquired 70% of the share capital of Silver Company on 1st October 2011. Meaning that 70% is more than 50%. Meaning that Silver is what here? Silver is our subsidiary. And if that is the case, then we have to consolidate. So the following extracts are from the individual statements of P&L of the two companies for the year ended 30th September 2012. All right. So we have Purple Company, we have Silver, we have revenues, we have cost of sales, we have gross profit. They got gross profit by deducting, remember. Purple Company had made sales to Silver Company during the year of shillings 5,000. That is an intra-sales. It's an internal thing. Purple Company had originally purchased the goods at a cost of 4,000. Half of these items remained in the inventory of Silver Company at the year end. So what should be the consolidated revenue for the year B? Is there anybody who has an answer really? Is there anybody who has an answer really? They're saying D, C, D, C, D, D. Hakuna kulia kwa. Because we don't guess here. You don't guess here. You have to compute. We have to compute. Thank you very much for trying. Please allow Mwalimu to also do it. One thing that you guys have impressed me is that everybody knows what that consolidation is all about. Adding. Consolidation is all about putting together. It's all about putting together. Then, because they only want you to consolidate the revenue, what you should have done to consolidate revenue, what you should have done. So our group revenue, in this case here will be equal to the parent's revenue, Parent revenue is 79,300, plus in this case here we have 29,900 for the subsidiary, 29,900 minus the fake intra-sale, the fake sales within the family is 5,000. Could you kindly give me the answer there? So you take the parents' sales plus the subsidiary sales minus 5,000. 104,200. That is the answer to this question. It was as simple as that. 104,200. So this is supposed to be C, or which answer, which letter corresponds to this? Is it C, D, or A? Or B? They are not talking to me. They are not talking to me. So D, is there anybody who got this D correctly? Is there anybody who got this D correctly? Is there anybody who got this D correctly? Yeah. So in this case here, let me see the answer they have given. The correct answer is D. The correct answer is D. I know the biggest mistake that so many people will do, like the ones who picked B, they took 100% of the parent and only 70% of Silver. And then subtracted, of course, 5,000. That is the biggest mistake you can do, ladies and gentlemen. For us, when it comes to consolidation, so long as you've got control of the entity, you can't control up to your percentage. So long as you've got control of the entity, you have got, for example, 5 out of how many? No. I should have, sorry. Great. Okay. So here, the worst mistake you can ever do is to come and give us, like you say, this is you take 70% of the subsidiary. No. Remember, group consolidation is all defined using the concept of control. That, for example, if you have got 5 out of 7 directors, 5 out of 7 directors, you are the one who has a say. So in that case here, you will take 100% of the parent plus 100% of the subsidiary. So long as you've got control, you consolidate everything of the subsidiary as if everything is yours. Remember, it is all about what here? It is all about substance over form. The form is 70%, but the substance, what is on the ground? Like right now, we appointed, for example, Uhuru Kenyatta, or rather the percentage that appointed Uhuru Kenyatta was about 51%, right? But honestly speaking, right now, is he a president of 51%? Is he not a president of 100%? It is about substance. So long as you are in control of the board, 5 out of 7, 70% shareholding. So long as you're in control of the operations of an entity, you consolidate 100% as if everything, in this case here, is a single economic entity. That is the concept of control. The concept of control. The concept of control. Okay, you can see in this case here, what they're telling us here is that even though this question requires an extract from the consolidated statement of profit or loss, the principle is still the same as illustration 2. Consolidate the group as if it's a single economic entity by adding in 100% line by line, and showing group performance with all the non-group entities. Therefore, answer B would not be selected as it is incorrectly, adds 100% of purple and 70% of silver. The other adjustment that requires careful consideration is the intra-group trading. In the consolidated statement of profit or loss, we must always consider 2 steps, right? Has there been any intra-group trading? Do we have any of these parent subsidiaries selling goods between themselves? Irrespective of whether the goods are still included in inventory at the year end. Do any of the items in inventory at the year, do any of the items remain in inventory at the year end? In this question, shillings 5,000 of sales have been made from Purple Company selling to Silver Company. This must be eliminated because it is fake. It must be eliminated in full from the sales. It must be eliminated in full from the sales. It must be eliminated in full. This thing of remaining some items which are remaining in inventory is normally used when you are computing what we call what here? UPS. So what are we saying, ladies and gentlemen, here as I finish this class? Listen, if you go to a question and then you realize that this question wants you to determine group sales. What you do, take in this case here line by line, the parent sales plus the subsidiary sales, you subtract any intra sales. Now, we go back a little bit, although this was not asked by the examiner. How about the consolidated cost of sales? Can you kindly try working out the consolidated cost of sales? Let's see whether there is anybody who will be able to get the consolidated cost of sales. And then there is one condition. if you'd want this great doctor of CPAs in Kenya to teach you, you have to really market our class. For those of you who are in section, or rather doing advanced level, who also happen to be my students in AFM, you know that we are always more than 100 in my class. I'm a man of numbers. If you want really to motivate this Mwalimu to even give you 4 sessions a week, and sure, I've just peeped into your group. I can see you're about 28. That's quite a good number, but smaller for me, small for me, right? So please, I would really send you out there as my agent from today. You would want to get this man teaching you directly. Please give me those numbers. Is increased to 50, 60. I'll be very happy. Are you guys influential out there? Are you able to bring your friends into this program? I'm not seeing a yes. I'm not seeing a yes. Yeah, please, I've got no way of marketing. I have one there already. Okay. Samoy, that is okay. Thank you, Samoy, but that is not enough. That's not enough. Thank you very much. Please try your very best. Bring in people. Bring in people. Thank you very much. So Purity has already given me an answer. Purity has given me an answer. Now listen, and listen to me very well. For consolidated cost of sales, we need, as a note there, NB, that we need UPS for purposes of calculating consolidated, for purposes of calculating consolidated cost of sales. For purposes of calculating consolidated or group cost of sales, we need UPS. And how do we compute UPS? To compute UPS, we normally take profit margin times RIS. RIS is the remaining intra-sales. Profit margin times RIS. Profit margin times RIS. Profit margin times RIS. This question, of course, they haven't given us profit margin, but we can calculate it ourselves. To get profit margin, we normally take profit over sales. Profit margin equals profit over who? Over sales. Very important. So like now here, these guys, the goods that they sold in between themselves, the total sale was 5,000, but they themselves, the goods that cost them how much? 4,000. So goods which cost them 4,000, they sold them at 5,000. So the profit here is 1,000. So this is the profit out of the sales of what here, somebody? Sales of 5,000, sorry. Listen and listen to me very well. I'm trying to calculate the profit margin. And for me to calculate the profit margin, what have they told us about profit margin? They've told us that Purple Company made sales to silver for 5,000. Purple themselves had purchased these goods for 4,000. So out of this particular batch, they made a profit of 1,000. 1,000 out of the sales of 5,000 will give us profit margin. So how do we get profit margin? Ladies and gentlemen, to get profit margin, we take the profit divided by the sales amount. So profit out of this batch that the parent sold of 5,000, it cost them how much? 4,000. So they earned a profit of 1,000. So it'll be 1,000 out of the sales amount of 5,000, which at the end of the day will give us how much, ladies and gentlemen? This will give us how much, ladies and gentlemen? 0.2 or 20%. Thank you very much. Now from there, I'll be able to come back to this. I'll be able to come back to this. So I'll come and say here, my UPS and realized profit on stock here will be the 0.2 times the remaining intra sales. The sale itself was 5,000. 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 And by the end of the year, we are told a half of these items remained in inventory. A half. So a half of 5,000 remaining. The reason here, the reason is a half of the 5,000. So could you kindly give me the UPS figure? Could you kindly give me the UPS figure? Lovin tells me 500. Someone has to confirm it. Someone has to confirm this figure. Someone has to confirm this figure. So they're telling me it is 500. 500 is correct. 500 is correct. Now I would want you to make another note. We are making 2 notes today, only 2, not very many, only 2 notes. So you have already made the first note. So I would want us to make the second note. I would want us to make the second note. I would want us to make the second note. I would want us to make the second note. I would want us to make the second note there. This second note, which I would want you to really make there, is as regards closing inventory overstated. Is as regards overstated closing inventory. Overstated closing inventory. Why am I saying the closing inventory is overstated? It contains UPS, which is against IAS2 inventory, which is against IAS2. Remember, IAS2 tells us that we should never have our stocks having profit in them. Profit should never be inside our stocks. That stock items should always be maintained at cost. Never ever should our inventory be maintained with sales cost. It's either, if you remember, the lower cost, not realizable value, but cost is the most important thing. So here we have a situation where our closing inventory is overstated. Then we shall do the following. So the adjustments will be like this. The adjustments will be like, there'll be 2. The first adjustment is to deduct the UPS from the group's inventory, You deduct the UPS that you have found here, because the group inventory will be overstated, because you have profit inside there. We need to cancel that. So we deduct the UPS from the group's inventory, and then B, we add UPS to the group's cost of sales, Can somebody help me answer Purity? Right? So these are 2 things, ladies and gentlemen. Like the other day, I happened to join friends of mine somewhere for some wedding, I think. Yeah, I remember that. And then there were some songs, of course, these songs which are songs of nowadays. They're not very nice, right? They're not very nice. But there is one where they kept on, in this case here, repeating the chorus severally until it sank in me. Ukasema kwa Kiswahili ati weka shida chini mikono juu. Right? Weka shida chini mikono juu. Wakasema namna hiyo. Najaribu kuimagine sasa kusema utaweka shida chini aje. Lakini unajua sasa iliingia kwa akili. The same case with this is our chorus. You may not understand so many things, but always I'll be remembering that whenever I get UPS, UPS will always be subtracted, from the group's inventory. And then straight away, we shall always be adding UPS to the cost of sales of the group. Now, why do we add this to the cost of sales of the group? I pray to God to help me very well to really explain this. Now, how do we get our cost of sales? To get our cost of sales, ladies and gentlemen, we normally take opening stock, perhaps 10. We add who? We add in this case here any purchases, perhaps in this case here what here 20. And then we'll come to subtract here less closing stock of say what here, say 5. So this will be 30 minus 5. This gives me 25, which is my cost of sales. Now listen. What if I was to overstate this by 2? If I put 2 more in this, then this will be 7. What will happen to my cost of sale? My cost of sale will reduce. My cost of sale will go down to 23. So because now we have a closing stock which is overstated, which has got profit inside, because the closing stock is overstated, then the cost of sales is understated. Remember, closing stock, closing inventory, and the cost of sales are inversely related. They're inversely related. When you overstate the closing stock, then the cost of sales will be understated. And then if cost of sales is understated, what do we do to make good? That is why we are saying to cost of sales add UPS. These are the details that I told you. Our chorus, weka mikono wapi, weka shida chini, mikono juu, lies in this, where we are saying that always add UPS to who? To cost of sales, and then you deduct UPS from where? From the group's inventory. I'll be able to show you how this works. I'll be able to show you how that works. Are we together up to there? Are we together up to there? Great. Now, from the question that I'm giving to you, ladies and gentlemen, from the question that I'm giving you here, I would want us to get the group cost of sales. So how will we be able to get the group cost of it here? So the group cost of sales will look like this. The group cost of sales, will look like this. I'll take the one of the parent. The one of the parent is 54,990. The one of the parent is 54,990 plus the one of the subsidiary. The one of the subsidiary is 17,940 minus the intra-sales. Of 5,000, plus the UPS, UPS must always be added there, plus UPS of 500. Could you kindly ask a question here? What have I done? I've taken the parents, right? Cost of sales. I've taken, in this case here, the subsidiaries cost of sales. I have, in this case here, done what here, subtracted the intra. Why am I subtracting these internal sales? Why am I subtracting it from the group? Listen and listen to me very well. One of the companies is saying, I sold the goods to my sister department, to my sister company at 5,000. On the other side of the coin, B is saying, hey, my parents sold the goods to me worth 5,000. So they record it under purchases. They purchased. Where do we normally get purchases? Purchases is normally found from, or rather in, cost of sales. So listen, that 5,000 will be subtracted from the sales. The 5,000 will also be subtracted from cost of sales. How I wish you guys knew how to sing these choruses. Listen, what have I said? The intra-sales. The intra-sales must be subtracted from the group sales, and they must be subtracted from, the cost of sales, the group cost of sales. Are we together? Are we together up to there? 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 So what have we said about intra-sales? If all of us were coming from the same tribe, I would have spoken using my tribe and told you that anytime you see intra-sales must be cancelled from the sales, and at the same time, it must be cancelled from cost of sales. It doesn't stop there. The group cost of sales, you must come and add who? UPS. You must come and add UPS. So could you kindly give me the final answer there? Could you kindly give me the final answer there? Give me the final answer. Okay. So like if you see what has been done here, here, you can see they have an answer of 68,430. Is there anybody who got 68,430? Is there anybody who got 68,430? 68,430? Is there anybody who got 68,430? Is there anybody who got 50? Is there anybody who got 68,430 before I repeat, because there's somebody who's telling me to repeat? Miriam, is it possible to post your question? So, ladies and gentlemen, what have they told us? What have they told us here? What I'm supposed to know in the group cost of sales, what am I supposed to know? I'll take the cost of sales of the parent. I'll take the cost of sales of what here? The subsidiary. I subtract 5,000 plus what here, somebody? Plus the UPS, My friends, some of the figures are here. You can see this and this. If you say this is 18,000, so that will be 72,000. It cannot be that high. Have you subtracted 5,000? And then you add 500. You add 500. It can't be that high. It can't be that high. Okay. So there is somebody who has fallen in love with my teaching style. That person is asking me whether she can get my video tutorials of this. For other sections, yes, but for section 3, this is the very fast that I've done, but I think I need to do more. I need to do more videos. That one I'll be able to do very fast, because I also teach with videos quite a lot. Remember, you've gotten this free of charge lesson from where? From a college, which is basically doing online classes 100%. So it's RCM Online College. Should you want to, in this case here, join us today, please join us to increase the quorum. Join us to increase the quorum for the class. This is our number. This is our number. I would lovely teach you in a way, for those that I've taught, you know that in my class, ukianguka, wewe ndio uko na shida. Si mwalimu ako na shida. Wewe ndio uko na shida. Wewe ndio uko na shida. Yes, Edna, FR I'll teach. I'll teach. When is FR, I'll let you know. I'll let you know. For now, I hope you guys, you have enjoyed, and you shall bring more students. Oh, okay.